President Donald Trump's tariffs are not only about trade, they are also about power, especially keeping foreign countries invested in American debt while the U.S. continues paying low interest on that debt. But these moves are now reshaping global politics. The balance many expected to last for decades is shifting fast, and what once seemed like a small technical issue has turned into a major struggle between two economic power centers. Europe has reached a point where delaying decisions is riskier than acting. Across the continent, leaders are facing higher costs, weaker alliances, and a growing sense that the old foundation of the US-EU partnership can no longer support what is being asked of it. As tension rises, the world is watching a fight over influence, currencies, and control, one that could reshape global trade. And a question once avoided is now unavoidable. What happens when a close ally chooses a different path? When President Trump placed heavy tariffs on the European Union, the relationship between Washington and Brussels entered new territory. Internal reports inside the European Commission show rising concern and a sense of urgency. These documents were never meant for the public, but journalists continue to access them, and they reveal a major shift. Sources quoted in Politico EU confirm that the EU is now developing a long-term plan that challenges the power of the US dollar. This is not a short-term political move. It is a financial strategy that could reshape how the global system works. Large EU economies like Germany, France, Italy, and the Netherlands are paying much more for imported American goods. Inflation and slow growth are already hurting their industries, and these additional costs make things worse. Analysts say European businesses could face losses of over 150 billion euros in the next 2 years if tariffs remain. This pushed EU leaders to take action. Insiders say the EU has quietly started reducing its holdings of US Treasury bonds. Officially, they call it a technical adjustment. But Bloomberg analysts say the timing makes the political message clear. Europe is signaling that it will not carry the financial costs caused by US protectionist policies. This is significant because America depends on foreign buyers to help finance its growing national debt. If Europe reduces its support, the US will face higher interest costs, something Washington has never experienced from an ally. But the shift doesn't end there. Across Europe, more trade contracts and banking transactions are being switched from dollars to euros. Data from the SWIFT payment system shows the euro at its highest share of global transfers since 2012, while the dollar share is declining. French and German officials express frustration, saying an alliance cannot work if one side harms the other while expecting loyalty. Italy is pushing new economic programs funded fully in euros, and other EU members are looking for ways to buy energy without using the dollar. Then came a surprise. Countries like Denmark and Sweden, usually close US allies, were among the first to stop buying new US Treasury bonds. They cite political instability in the US and concerns about Trump's economic strategy. This made it clear that Europe's shift is united and broad, not limited to a few countries. For the first time, Europe is openly discussing becoming a financial power center instead of simply a major market for American goods. These ideas are being discussed at the European Central Bank, the European Council, and even inside private NATO meetings. Some analysts say this could be the early stage of a long-term decline in the dollar-AS global dominance. A recent internal report from the European Parliament argues that the dollar's strength depends on trust that the US will remain stable and predictable. According to the report, recent US policies are shaking that trust. Meanwhile, Bank of America analysts warn that if Europe continues reducing its US debt holdings, Treasury yields could reach levels not seen before, raising the cost of managing America's $36 trillion national debt. Even US media is starting to show concern. The Wall Street Journal notes that Europe has shifted from reacting to US decisions to creating its own strategic plan. CNN reports that Trump advisors are debating financial retaliation because they fear losing the dollar-AS power as the world's main reserve currency. Europe says these steps are only the beginning. Plans are underway for a Europe-wide energy market not priced in dollars. Industrial investments funded entirely with euros, new partnerships with Asia and the Middle East that bypass the US. These were once considered unrealistic. Now they are being treated as necessary. The global system is moving toward a future where the US cannot depend on automatic financial dominance. Europe is not declaring an economic war. It is simply refusing to follow rules that no longer benefit it. Economists expect visible results soon. The dollar may not disappear from global trade, but its influence is clearly being challenged. Second part, tariff deal concerns. In other news, EU countries have approved tariff cuts on American imports. Many see this as a forced compromise created by pressure from Washington. A U.S. delegation visited Brussels to push the EU to move quickly. The agreement requires Europe to eliminate tariffs on nearly all U.S. industrial goods, while the U.S. continues charging 15% tariffs on European exports. Some EU leaders wanted a 5-year sunset clause to limit the deal, but it was rejected because many feared angering President Trump. All 27 EU members approved the deal, but with two important protections. The EU can suspend the agreement if U.S. imports flood the European market. The EU can also stop the deal if the U.S. fails to keep its promises. The European Parliament is expected to reopen debate on adding the sunset clause, but Germany strongly opposes it because it fears U.S. retaliation. Negotiations are ongoing, and officials warn that changing the deal too much could trigger another trade conflict.